All right. Well, again, welcome everybody to Sunday night at the look at the week ahead. This is Sunday, the 8th of July, 2018. Looking at the economic news, I'm looking at not really a whole lot of things that are important. Really, on Wednesday, we have PPI and wholesale inventories, CPI on Thursday. Then we also have Friday import export prices and consumer sentiment preliminary numbers. What's more important is on Friday, let's not look at that. Let's bring this up here. Very light week for earnings early on. PepsiCo on Tuesday after the bell. Fastenal, AM Thursday we got Delta Airlines. And on Fridays, where I say we start with the earnings season with Citigroup, JP Morgan, PNC, and Wells Fargo. The following week beyond that is a little still on the light side, but some financials there. And the week after next is when we get into hot and heavy for the earnings. So stand by for news to happen there. Okay. Let's see. Let's look at Right, I'm going to start with the US dollar. I'm going to back out to a 6-month chart. And you can see, well, we've had a heck of a run here. But now we're pulling back a lot deeper than we have in most of the cases, except for this one in June. And that's probably a little bit due to the interest rates and the trade war stuff. But I saw something over the weekend posted on, I believe that it was StockTwits. And they were basically saying that when you compare the S&P, which is pulling back a little bit, with the ASHR, the China shares, we're doing a whole lot better than they are. So, wonder who's winning or who's losing in the trade war. At least in the stock markets, the U.S. is coming out ahead. Not sure if that's going to be the long term. All right, the dollar's pulling back a little bit here. Crude oil, I'll zoom into a 3-month chart. Crude oil is pretty much flat. Stochastic SAR is pointing downwards. As long as we can stay sideways there, that's building up cause for a next move up. Gold, stubbornly hanging around the 1250 to 1255 level. Stochastic RSI has been basically used up just to go up, say $10 an ounce. At some point, we are either going to break above and go up higher, and we're going to probably have to break over 1270 and 1280 to break the downtrend, but we could roll over. Let's look at, there's silver coming up, and silver is looking just about as weak as gold. US 10-year backed off quite a bit. This is probably the reason, I'm going to go to a 6-month chart. It's probably one of the reasons why the US dollar is not doing as well. I guess if you look at the relative prices or whatever, we're down at 2.8, 2.83. All right, let's jump over to the equity markets. Before we actually jump into that, I want to go back to, I get a nightly report that's free. I'm going to plug somebody else, David Weiss from weissonwyckoff.com, right here. WEIS on Wyckoff, WYCKOFF.com. Puts out a free newsletter every night. And he does a pretty good job of trying to monitor where the markets are going. He focuses on the E-minis, S&P, and his write-up here basically told us that if we could get over this 27.45 or so, that we had a chance to attack this downtrend line. And again, this is a 4-hour chart. And all right, I'm glad to hear that it was, yeah, good job. And I mean, there are a lot of free resources out there. This being one of them, I thought I would, the guy obviously has a pay service as well, but this one is free and it's quite good. He doesn't always get it right, but who does? He always just says what's the positive, what's the negative. He basically says he doesn't want to see a close below the low of Friday on 27.31, which was basically right here, not long after the open. We hit that. So basically, we tagged the 27.45 level a few times and finally punched through it on Friday. Early on in the day on Friday, I was a bit concerned about that. All right, so let's pull that out of the way. We've got our earnings out of the way. We've got the big picture out of the way. Pull this out. All right, let's look at the S&P. I'm going to zoom in. Before I do that, I'm going to show you that we're up at this level here, or we will be at 27.90. We've hit that a couple of times, 3 times already. Let's see what happens if we can get up there again. It does look like my stochastics RSI says we've got a couple of days left, possibly to the upside. This 2780 to 2790 is going to be critical. 2800 is what Weiss calls for. But my volume at price level is the 2780 and then 2725. So he calls 31, I call 25. We're cool. We're pretty much the same. Let's look at the NASDAQ. Well, we're basically flat on all the indices tonight. Stochastics RSI still have a couple of days left in it. And the possibility of a 7,300, it's there. We'll see how it goes. This level here at 72.25 was key. We are over it right now, but we need to maintain over it to keep going higher. Russell, basically flat. Russell's been the strongest index a number of times here. It led us out of the abyss in April, May, and continued up in June. Late June, early July, it kind of had a little bit of a dip here, and we're going higher. Okay. Dow. Thank you very much, Herman. I appreciate that. Walter. There you go, Sal. Cooperate and graduate. Here's the Dow. The Dow has been one sick puppy. And one of the reasons why the Dow is probably not doing all that well is more than likely because of its heavy involvement with financials. And look and see what XLF has done here. They've got a lot of financials in the Dow, and we have not been doing well in financials at all. And it does not look promising. This coming Friday the 13th, by the way, is going to be critical for that and probably the Dow. Let's go look at the transports. Transports, thank goodness the Dow is weaker because otherwise it would be the tail end Charlie. It's kind of hanging on to the 200, but it's taken all of its energy and might to do that. More than the 200, it's this volume at price level. It doesn't look all that great. And a break below 184, what do we got down there? Below 184, we probably go to 180, and below 180, wow. Katie barred the door. I don't want to think about 171 in the transports. And if those of you who are Dow theorists, you'll know that the transports kind of give us an idea of how the market is doing internally. All right, let's go look at the VIX. VIX is down to 13.3. Kind of no fear. We've kind of sold off tonight. What was that on Friday? Yeah, that was on Friday. We're going towards the lows here around 12. So I would think we've broken this range here about 14 and a quarter to 14 and a half. Are we headed back down to the 12s? It's possible. Stochastics RSI will be curling up for the bottom, which means we could get a bounce, but we'll see how that goes. Now I'm going to run over to TC2000. I have a number of stocks to look at, but before I do that, I want to look at the T2122. And we're in the pullback zone. It doesn't mean that we've got to pull back, but it means we're getting the canary in the coal mine. We're likely to pull back. It has no idea, there's no predictive capability of knowing how long or how deep the pullback will be. But I would anticipate a pullback fairly soon because we're getting an extreme number of stocks that are making a 4-week high in relationship to 4-week lows. That's 1 month. I find that to be very, very telling. All right, let's go back to that. I will look at a few stocks here that are potentially trade ideas this week. One is Camping World Holdings, CWH. This is what Rick calls a rounded bottom breakout, and if you Google it, you can find some information on what a rounded bottom breakout is. I am by no means the expert in it, but I do know that a lot of times stocks that have turned around, once they get it back over this 50, they'll rally, they'll come back and retest, and then they come back up. And the target is anywhere between the 100 simple moving average and the 200 simple. Basically, it says between the current price and the 200, there's at least 10%. All right, so CWH, its first level, probably going to be here around 29, but from 26, I'll take it. Dish. This is also a rounded bottom breakout. I think Dish is destined for $39. So that'd be a fairly healthy move, $4. Biogen reported some, I think it was for Alzheimer's results and tests, phase 2. Watch for this one to possibly do what I call a 45-degree angle, 30 to 45 degrees, for it to kind of grind upwards here, because it basically jumped the creek. There was the 200 period moving average was a price level that it could not get over for a while, and we went up to this 369 level and pulled back. It's potentially we could go up there again. I expect a retest of that, and if I go to the hourly chart, you'll see where the high volume spike was up there, and if I go down to a 30-minute chart or even a 15-minute chart, you'll see where all the volume was. It's up in this level, maybe around where we're at, and I'd suspect that it would go there. And it went from kind of slightly negative balance of power to very, very positive on huge volume. That was just not mom and pop buying on Friday. Next one up is SFix, Stitch Fix. It did a gap up here on earnings, and then there was my 45-degree runner, and it panned out fairly well. Now here looks like another potential 45-degree run. If we go look at the area chart, it's at all-time highs, and when these are in favor, they run until they don't. So I'm not saying that you go buy on Monday at the open. Try to find some sort of possibility where it goes. Let's set this up here. Let me do the color green. Okay. Let's just say that it does something like this. Whoops. Nope, I don't want to do that. What I want to do, Let's say that it does kind of dojis for the next couple days and then starts to move up. That's what I'd like to see. That's what I'd like to see is sideways consolidation. Then it can set ourselves up for a stop level that we can live with, a break above this level, and then a move higher. That's what I'd like to see. Now, may not get it. It may pull back. It may pull all the way back to 30 or whatever. But if it pulls back to 30, that's okay. Pulls down below 30, I'm going to get a little concerned. All right. Let's move on to the next one. Next one's WTI. I'm looking at WTI to possibly break above this, 7.5 level, 760 level. And then if that's broken, my target is all the way up here in the 875 area, $9. So that would be my target. Bob's not helping us any. Stochastics RSI is not helping us a lot either. ACAD just popped his head up, looking at a roundabout breakout. Want to keep an eye on this one. May not be on Monday. See that it goes up a little bit. Maybe if it goes sideways for a few days, give us a buy signal. Really decent and significant change in the balance of power. Watch for the first level to be around 19 and a quarter, and kind of an ultimate around $20. All right. One that popped up on my radar scope and we traded in the room on Thursday was AMD, and it really broke out on Friday and moved up. The target is up here around 17 and a quarter. All right, so we're moving our stop up and did a volatility stop flip. Now, the balance of power is not there. Stochastics is kind of okay, and volumes are. But guess what? Price is king. Price is number 1, number 2, and number 3. One that broke the downtrend is Boot. So basically we have this being our downward momentum. We've broken above that. Hold on a second. Let me put the phone on stun mode so we don't get interrupted. And there we go. I think that it wants to try to go up this to 25 level. Again, it's moved up so much, 5.5% on Friday. I'd probably like to see it consolidate and go sideways for a couple of days before it tries to move higher. And basically it's a 1, 2, 3 move where you get a 1 up, the 2 is a consolidation, 1 or 2 days, and then the next move up. Next one on the list is Super Value. This was not here necessarily other than to point out to when you get stocks that come up and then pull back, and this one it hit the 17 a couple of times here. Watch for it to curl back up and go long. Don't wait for the breakout. Now, we have not had a ton of stocks following through. A lot of breakouts, unless they're on their own page, are not working. This one, in fact, did work, but you notice that it, for 2 days here, it kind of stalled around the 21 and a half level. And on Friday, it picked up. Stochastics RSI is still pointing up. Volume is slightly below average, but it's okay. All right. Here's another winner here on CBS. I got in here middle of the week. Maybe it was, what was it? Was it Monday? It was actually on Friday of a week ago, because we actually lost a day in the middle through the holidays. And take a little bit of heat, and then it popped up. I just finally took my profits, blended profits about, I want to say 63% on options, and I'll take it. I just took my 60 some odd percent and ran. If this one runs and runs to the moon, I don't care. The Stochastics RSI is only just barely creeping forward, and the volume is less than average. So I said, you know what? I'm not going to be a greedy person. All right. Next one is WSC. Now, WSC is basically doing a consolidation move here in the last few days. Right in there. If you discount the move back, it did a gap up on earnings, and it's digesting that move because that move came from down there to there. In one day, it was 25%. 25% is a lot to digest. It's taken a while, but I would not be surprised that at some point it breaks out of there and it gradually does the rise to 45-degree runner like I thought it might do back here. Next one is XLearn, and it's a biotech, and even though this 45-degree runner didn't work there, we're kind of holding a kind of a consolidation period here the last couple of days, so I'm going to keep it on my list to watch and see what it does in this $46 to $48 level. Probably play options, that way you can control your risk, and area chart all-time highs. Another one out here that been in since 2913 and it's having trouble getting over the 3050 is Acor, ACOR. This puppy probably wants to get at least 3275. I'm thinking 3475 or so gets retested if I could hang on long enough. A concerning factor, not only is it taking a little bit of time to get up here, but the balance of power really dropped off quite a bit. So the interest by the people out there has waned quite a bit. Actuant, one of my consolidation plays here, and I'm looking for a breakup over about 2950. And that's decent, got balance of power. And I thought a few days ago that the stochastics RSI was ready to curl up, but it hasn't gone much of anywhere. Another one of our J-hook here is VeriSign, VRSN. Bullish engulf off the bottom here, and stochastics RSI came up off the bottom. The target here is around 146. Another one out here is MAA, just kind of a, steady Freddy, goes up, pulls back, goes up, pulls back. Pulled back to just under 100. I think it goes up to 102 or so. We'll see how it goes from there. Balance of power is not really helping us. Stochastics RSI is somewhat predicting going a bit higher. VMware gapped up on some news from Dell regarding its VMware and its tracking stock. Got a bunch of interest in the stock, so potentially it goes up from here. If it breaks below this 156.5 to 156.25, I'm probably going to push this off of the watch list. Shouldn't go below that. Another one that did basically a bullish flag here, Pennant, is Twitter. And now it moved up on Friday, and $47 is the key level there for it to get back over. Stochastics RSI is curling up. Balance of power is not so hot. Align Technology. Try to do a bit of a J-hook here after a pretty healthy run here. If I look at it on a 3-day chart, there you can see the J-hook forming. Now the balance of power weakened off, but again, it's a 3-day chart and curling up off the bottom. Here's the 1-day. Sometimes using multiple days, like a 2-day chart or a 3-day chart, or the weekly, will help you discern what the pattern is and confirm it. Just a different look. AKR, same thing here. Look at a 3-day, you basically got a doji and a move up. You can see that I like the 3 days a lot. CarMax gapped up on earnings, pulled back really, really deeply, which is why it didn't get me all that excited on this bullish engulf day, but it gapped up and did a little doji, and it looks like if it can get over this $77 level, it probably goes to 81. One of my favorite trading stocks right now is Costco. I have January 2020 leaps, $150 calls. Yeah, I paid about $47 for them, but they're at 65 or so right now. And this puppy right here did a pullback and going back up. If we look at a 3-day chart, you got to see where the J hook is. There's the 2-day. It did a kind of a bullish engulf on Friday. Need to see follow through and a retest up at 212. And what you see here on the red lines and the green lines, I'm selling covered calls against that and covering, sell, cover, sell, cover. This one I actually rolled out when I covered it, so it's out to the side. Next, the last one is Weingarten Realty. You can see how it did a move up, did a pullback. The retracement was a little deeper than I would have preferred, but again, you'll see a lot of REITs that are on that list, and I think it wants to go to 31.75. The one big problem I've got with this and some of the others is if you get in now, where's your reward to risk? What's the calculation? If it's not 2-to-1, you need to probably find a different way to get in. And if it pulls back, you can't necessarily say that it's going to go all the way up to $31.80 or $32. Another one did a gap, and the 45-degree rudder just did not pan out, was the shares of Nike. But it's holding 76. If we can get back up over the 77.5, I think it could do a run here from, say, there. Excuse me. Could not get to the microphone in time. Okay, that's what I'm looking for. All right, it is 7:30. I have just a little bit here. Let's see what we got here. We've got 70 people out here. I'm going to ask first, does anybody have any general questions of what I've covered? Not necessarily individual stocks. I don't want to take those yet. But stuff that we covered in the discussion so far. Oh, right. You want to know what my scans are? All right, and let me explain what these things mean here. Oh, I'll do that too. Let me take a snapshot of this for you and post it out there. And this is my J-hook scan. And for people who have TC2000, it'll be fairly simple to do. All right. AB820. AB820 is that the 8 exponential is above the 20 simple. This was a naming convention that Rick uses in his live scanner that's outside of TC2000. And so I chose to maintain the same naming convention so people didn't get confused. The second one, and we want that to be true on a daily basis. We want the 8 exponential to be above the 34 exponential and above that to be above the 50 simple. So 8, 34, 50. And we want 2 days lower highs. That's not lower lows. We originally went with lower lows and we found that some good stocks were not coming up. And what was happening is that it wouldn't go to a lower low on, say, the second or the third day, but it would go to a lower high. So it still had a downtrend going. So we flipped it over, did it, doing it from the highs instead of the lows, and we get quite a few of the better returns here. We could have done with an or, 2 days lower highs or lower lows. So that would probably be the only thing that I would change in this one right now. Up today. Got to make sure that it's going up today because I don't want to get in unless it's actually turned. And I want today to be over yesterday's open and over yesterday's close, because I have no idea what yesterday was. Was it an up day or a down day? Okay. Volume 20 days. I want 485,000 to any swings. That's higher than most people do. Rick will do as low as 250,000. For me, 500,000, which is why 485 is why. And I'll come over your question in just a minute, George. Price between 5 and 200. Between 5 and about 50, I can do cash. Above 50, I probably got to do options. And do I want to see $1,600 and $2,000 stocks out there? No. Not to do trades. And to eliminate those that don't move any, I have the average range greater than 25 cents over the past 14 days. Could do that as a percentage, but to be honest with you, if it doesn't move 25 cents, regardless of what the percentage is, I don't probably want to be in it because it's not going to cover my commissions. Let's go back. CBS. Well, I'm sorry. Sal asked the question first before I get that. What's the strategy? Well, the strategy is that I like Costco. I didn't have $200 to buy a bunch of shares. So I bought long dated options. The first time I bought January, I think 145 calls or 140, something like that. And I let the stock, the idea was for the stock to come up and to rise. And let me move this over here. Let's zoom out. When it gapped down on the Amazon news that it was going to buy Whole Food Markets, I didn't make a technical decision. I made more of a fundamental call. I'm a member of Amazon Prime. I'm also a member of Costco and Sam's Club. I know that Whole Food Markets and Amazon are not anywhere near the same. The people that go to Costco love it and they're not going to give it up. All right, so once we leveled off here, I bought my 140 January 2009 leaps. I had to take a little bit of a heat and it did kind of a double bottom here. But I said, okay, I'm going to ride this one and ride it up for a little bit. And I have not marked where I was selling the leaps. Sorry, selling the covered calls. I didn't start selling covered calls till we got over, until we got over this 185 level or so. So when the stochastics RSI gets to the upside, like right in here, I'm looking to sell an upside covered call, and I will sell it well out of the money, $200 or so. And when it's going up, people will pay up and pay silly prices for that. Now I move it out 30 to 45 days, and I get the premium of 0.7 or better in the delta. And then when it comes back and I get the bottoming action, I either have to buy it back or roll it back. Well, it didn't work all that well over here, but what did happen is that I got such a lot of, I got a lot of capital appreciation. I think it was in October, November, maybe it was November, December. I took 50% profit in the leaps, and then waited for the next pullback, and then bought 20 leaps. And then I got really active about selling the upside calls. And so the idea is to sell the call here when the stochastics RSI is at the top, cover when it gets at the bottom, and it's a judgment call, And when it gapped down here, I said, gaps are gift. Oh, no, sorry, it gapped up and reversed. And then it gapped down the following day. That's when I took it, and it reversed higher. When it gets to the top, I would sell, cover, sell, cover. What I'm doing is I'm basically giving myself a dividend while I hold. Because if I just held the option, it would go up and down and up and down and up and down. And I wouldn't be getting anything for it. My money would be tied up. So the strategy is to get a little bit of dividend. Now, the problem is that you can get yourself into a pickle. I'm in a little bit of a pickle in that I had sold the 210 calls here. They went up and they came back down, and I had to buy them back, or I did buy them back at a higher price. What I did is I bought them back and rolled them out. Well, no, I bought them back, and I'm going to roll them out after they get the next curl up. Sorry. So I took a little bit of a loss in this one, but I didn't want to get taken out. I could have rolled it out here, but my idea is that I gave back some of the profits that I had over here from the prior options trades. And all it is okay, it went up higher than I thought. It maintained the level, and I bought them back. All right, so I hope that explains a little bit about the theory behind it there, Sal. Okay, George asks, on J-hooks, you don't want them to go much higher than prior resistance. Let me see if I have my favorite chart patterns here. Oh, it looks like, can you guys still hear me? It looks like I had Internet Explorer blew up on me. So I may end up not being able to see you guys. I may have to exit the room and come back. Okay, great. What I'm going to do is I'm going to see if I can open. Okay. Let me explain the J-hooks, and only the J-hooks. Here's the J-hook pattern. And traditionally, I learned about the J-hook when I was in Mr. Bigelow's room in 2009. His way of trading the J-hook was to let it go up, let it go back, and trade the breakout. And I looked at that and said, why are you waiting? Why don't you buy here? Let's change that. Why don't we trade when it goes above the bottoms here with the stop here? So we have a really tight stop, and you use the retest of that swing level as your target number 1. And you sell half there. And now the stock would have to go all the way back to where you bought it, back to here, for you to lose money. What happens, or has been happening lately, and this is why I didn't like buying the breakout here, is that a lot of times instead of following through like this is, it'll be up 2 to 3 days, and it comes back and it collapses and goes and at least retests the breakout area, and most of the time dips down below it to shake out the weak hands. So that's the reason that I do what I do. I don't want to, I don't want to wait till the breakout. Another reason I don't want to wait for the breakout, where's my stop here? My stop has to be at a minimum right in here, but more than likely has to be all the way back down in this level. I don't want to give up that, but I've got a tight stop when I go long in this area. There with the stop down here. That's the philosophy. I don't want to risk a lot. I have a known quantity. I have a checkpoint. And it most of the time will hit that checkpoint. Sometimes they fail at that checkpoint, so be it. Which is why on the CBS, I'm not unhappy taking my full profit at this level. Roku, same thing. Was down here, took a little heat, it gapped up, run into retest this level. On Friday afternoon, it didn't look like it was really continuing any higher, so I just went in and took all of it off the table. I'm not going to get greedy. Too many times it's gone the other way. It's or give one of these things personally. I hate giving money back that I had in paper in my account, and that's me psychologically. And I'm okay with this thing running beyond me because I believe that it'll come back and retest that breakout level. I'll just keep it on my list. Okay. All right. And we're still good there. Okay, let's see. Can you guys just put one stock only? We're looking at it's 7:45. I only got about 15 minutes or so. And tell me whether you're long or you're short. If you don't tell me whether you're long or short, I may not look at it. And we got 70 people here, so okay, Herman, you get to be number one here. Twitter, you hang on to it, and when it gets up here to 47.50, decide what you're going to do. Trade your plan, plan your trade, and trade your plan. So the whole idea here is that it should keep going higher. Now, volume picked up a little bit, but it's below average. Balance of power is not so great. And I covered this one already, but on the 3-day chart, you can see how that was looking pretty decent. So we'll see how that goes. David L., CECO long. Nice breakout. Now you need follow through. Negative to here. There are a couple of them. One, your balance of power is red. That means we have net sellers over net buyers. The other thing is my stochastics RSI is in the overbought condition, but that doesn't mean it's going to stop. That just is a warning that it could. See what happened over here to the left? Let's see. Mark that up. See what happened over here? It basically stayed pretty close to overbought as price moved up significantly. Two full dollars. 15-18%. Let's see what that is here. Yeah, 13.5%. So just because it's in an overbought condition does not mean it's time to sell. You use price for buying and selling. Okay, David BZ wants to look at God awful GE. Let's do one thing. Let's go to my EMA only chart. That'll help take away all the confusing candlesticks that are out there. For the longest time, it's been a downtrend with a reversion to the mean. Downtrend, reversion to the mean. Downtrend. Is this a reversion to the mean or is this a change? The one thing that's different, we didn't set a new low. To me, GE's not a buy till you set a new high. All right, let's go back over here. Whoops. To the daily. All right. In my opinion only, anybody who's buying it now is anticipating that we're going to make a new high. So there's the high, there's the low. Lower high, lower low. Lower high, lower low. That looks like a higher high and a higher low. This one has to break here at 1450 before I'm interested in it. Now, balance of power is turned up a bit. What it's doing, fundamentally, it's selling off its assets. It's selling off the ones that people will buy. That means it's likely to have nothing but trash left when that selling finishes. I don't probably want to be there. Personal opinion. I know people who are long GE, and I wish them all the best. Kroger. Richard. Okay, Kroger was a buy back here after the doji. I think you got to make sure that it gets over this 29.75 level, but it gapped up on earnings. It pulled back to the gap up level. It held. I would look at probably it holding above 28.80. This is not going to be a burner. It moves 87 cents a day, which is 3%. But it is look like it's trying to curl up on my stochastics RSI. Balance of power is just okay. Let's see. Let's look at 60 minute here. I'm seeing a little bit of 29.50. Seeing a little bit of resistance here, but it does look like it wants to get back up to the $29 to $30 level. So have your plan, know how far you're going to give it. Take some profits along the way if you can. Okay, Derek wants to look at OLED long. All right. Again, bottom fishing of sorts. I'm not a fan of it. Let's look at the EMAs again. Yeah, it's 100. Oh, wait a minute. Yeah, they're on the dailies. So good. This level over here, before it curled back down, about $90. Watch and make sure it gets through there. Have your plan. Stochastics RSI is overbought. It's still going up, but it's been overbought for a while. So let's see, is it going to try to run the shorts out of town and whack them or not? I don't know. It's possible that 93, 94 is also a target. That one's a tough one. Another reason why I don't like to buy in downtrends is that the wind is not at my back. The tide's running against me. I'm trying to swim against the tide. The tide is the moving averages are going lower. Now, they've just about curled up, but what usually happens is you get a move up here and then a move back. And I don't want to give it back to that. Okay. CTSH. I've only got a couple more minutes, really. CTSH, got to make sure it breaks above this $80.75 to $81 level. Then it probably goes up here to $81.80. It moves to $1.37. That's okay. Let's look at the area chart. There's the weekly. It does look like it's trying to heal itself. And the exponential moving averages are telling us that we're probably having a change in character. And the other way that proves that, there's the low, high, low, higher low. We got to get to a higher high though. And I'm a little concerned about these guys over here and the stochastics RSI being so far overbought. Okay. Sal, Ford long. Don't know why. Sal, I don't like this one at all. Just like I don't like the financials. And high, low, high, low, high, low, high. Maybe we make a double bottom. Maybe not. Maybe this over here holds at 1011, 1090, 1085, whatever. But make it get to a higher high. Make it break through this 1140 level and then come back and make it prove to you that this 1110 level is going to hold. Now, if you're already long, okay, I understand, but don't let this one get away from you. Don't sit and write it and say, well, I sold it now, I'd take a loss. I can't do that because the losses could get bigger. Okay, Bimal Sharma wants Square. SQ was a darling over here for the last couple of years, and then we started moving up here in May, June, pulled back, curling back up. Problem with these is a lot of times if you have a movement like that, or a movement like this, or like this, they come to kiss one of these lines goodbye. Now, it could come back up here and do a double top and roll over and go all the way back down. It could come back, do one of these retracements and go back up. I don't know. If you're already long, great. Pick out a spot that you can't stand to be under, to let it go. The 60 minute doesn't show me really much of anything except all the way back under 63.75. So, yikes. The one problem I've got with Square is personal. $2.87 a day, 4.3% every day. With options, I might be able to do it, but this is not for the faint of heart. Especially when you get possible days like this one here. These dark candles here. Okay, so far it's working in the macro sense, but it could be a zigzag all the way up. See what happens when it gets up to 69. Mosaic wants looking at Baba. Okay, Baba was in a downtrend and it's doing a reversion to the mean trade. I think that may be all that it is. What? Oh, those are lines. Sorry. EMAs. This downtrend here, and it looks like it's trying to curl up, but we haven't had any crossovers. It moves 3%, $6 a day. Again, not for the faint of heart. This level here about 194. Got to get up over it. Some people will be sellers around the $50 level. Some people will be sellers right here around 198. Watch what it does when it gets to all of those. Have a plan in advance. You know what you're going to do when you see a pullback or a pause at these levels. So you're not trying to have to figure it out and let your emotions take over. Do it now, and you will do it in a very methodical way, and you know what to do as soon as you see it happening. Okay, Mel wants to look at SPWR. Okay, what I'm going to do is I'm going to cut it off right at the moment here. SPWR, you're right. It could go long, it could go short. Right now, we don't do anything. You just maybe watch it for a breakout or a breakdown. Let's look at the area chart. It's flip-flopping all over the place. Let's look at the weekly chart. Oh boy. Excuse me. I'm seeing right here. This is a weekly. Create parallel line. There's a trading range. If you want to trade the trading range, you can do it. I wouldn't. I'd wait for a break above or break below and see what happens. If it's below, I don't normally short stocks under about $20. Now, this might be an exception because it has a decent enough volume. Again, it moves 34 cents a day. That isn't very much, but it's 4.27%. right up there. Okay, we're getting a late thunderstorm tonight. Oh boy. David wants to look at PDCO. I think you tried to sneak a second one in on me there, sunshine. All right, let's go back to the daily. You're welcome, Mel. Oh, you have leaps. Okay. Petco, I was looking for a break over 25.75. This one did a nice move up. Unfortunately, the retracement was far too much. What normally happens, and well, what I normally see, it isn't always exactly the case, but let me draw a quadrant line here. Oh, move it over one. Okay, here's the quad from the low here to the high there. 50% level is right in there. This one went to about the 75% level. For me, stocks that get below the 50% level never break out. They may go back up and retest this level, but they don't break out. Stocks that do 65 to 75% or 100% retracements, they have trouble getting all the way back up to the prior swings. They just kind of zigzag along here and eventually they peter out. That's usually what happens. It doesn't mean that that's going to be the case with this one, but it's the norm from what I've seen. All right, we've cut them off. So CB, you're going to be the last one. So no more stocks. S Stryker Corp. I kind of like this one in that stochastic RSI is pointing up. If we can continue to follow through above 173, 174. This is a void. This is a waterfall. There's very little above this level here to stop the stock from rising. As it went down here and it just basically plummeted, it can do the same thing to the upside. So above this level, about 174 to 175, that one could do a quick run. So I will put that one on my watch list. Thank you. Last one's Baidu. Baidu's in no man's land. We're basically, I'm going to say it's right here. To there. Or there. To there, which is double. Now, what do you see from that? What I'm seeing is a lower high. What I'm looking at here is an equal low. That's doing a declining wedge. That right there is not a bullish pattern. It isn't to me. Anyway, we've got thunderstorms coming over the top. I'm going to go outside and poke my head in. That's going to be it for the look at the week ahead. Remember, earnings season starts on Friday and gets off in earnest in the next 2 weeks or so. That could pull us out. And you guys have a wonderful week. I will point out that we have the an open house basically going on for futures trading starting right now. And every day, let's see here, let's go here. Let's go here. You can come join me every day, Monday through Friday at 9:20 to trade options right here in this room. No password required. If you're interested in doing that, if we're interested in doing that, you know where to come. All right, you guys take care.